Welcome back, friends. Stock markets across the world have soared to record highs this year, despite half the world heading for elections in this year and ongoing wars in the Middle East and in Ukraine. What we are, however, seeing is that there is a potential vulnerability, that is a risk that we have to take into consideration when we look forward. The theme of my video is what are the risks that the markets may be underestimating and that can come forward, other than the inflation risk that has pretty much been factored into, and the Federal Reserve has taken care of it in a substantial measure. Europe's macroeconomic outlook is bright, although many of the countries are even now dipping into a recession or close to. But markets may be underestimating the potential for sudden destabilization due to geopolitics. We are talking about the election or the electoral cycle that is taking place not only in the United States but also in Europe. And simultaneously, therefore, the accompanying or the concomitant geopolitical risks. Markets sometimes are underestimating the potential impact. The reason being for worry being that markets are normally very good at calibrating financial risks and economic risks, but they struggle to incorporate the separate dimensions of geopolitical risk, which is often viewed as an all or nothing binary. Stock markets in Europe and the United States have soared to record highs, brushing past the impact of ongoing wars in Ukraine and now in between Hamas and Israel, and a host of coming elections in which half the world's adult population is going to come out and vote. The ECB on Thursday released its latest financial stability report, which stated that the euro financial stability has improved due to a better economic outlook and falling inflation. Okay, that's how they look at it. Rising geopolitical risks, however, present considerable downside risks. Risks remain high on a historical basis, given factors such as rising debt service costs, signs of banking profits peaking, and the ongoing downturn in the commercial real estate. The report attributes the rally in financial markets to analysts' expectations of interest rate cuts from the major central banks this year. Growing signs of pricing for perfection is creating the potential for outsized market reaction to disappointments. And this is what can curb the rally going forward. The ECB did not factor in any concrete outcomes when it comes to the results of the elections, but that overall they posed a possibility of additional fragmentation in the global economy. An increase in tariffs and the implementation of protectionist measures from some countries, especially in an election year, is going to add fuel to the fire. So we have on EV vehicles, the United States increasing the tariffs on imports from China. This all is going to give rise to fragmentation in terms of trade, in terms of growth, and that will in turn reduce the potential growth of the global economy. Once the growth of the global economy comes down, then naturally this has concomitant effects on the earnings of the companies which form part of the global economy, and therefore on their various stock valuations. All this, an abrupt market correction poses a potential vulnerability because everything at this point of time is priced to perfection. So even a whiff of wind that comes can come and upset the apple cart. This is the element that you cannot ignore, you cannot overlook the potential impact that could affect risk aversion, risk attraction, commodity prices, growth, overall growth in the global economy. Friends, all these are the factors that we are taking into consideration before we give our predictions. Our predictions are not only for a day, as we have some packages which are giving you predictions for a day, but we look into it month in advance and beyond as well. So do join any of our packages. The Prime or Prime Plus are addressed for the US stock markets, and you have the Premium Value, which gives you 1 year predictions for the Indian markets, the Nifty and the Bank Nifty in advance. You also have the Bank Nifty, and if you need more longer duration predictions, then you can join the Premium Plus, which gives you 2 weeks predictions of how the markets are expected separated or broken down on a daily basis, also with some very good stock recommendations and multi-bagger ideas. To get in touch with us, please WhatsApp us on 982-086-1044. You can also email us at globalmoneyinvestor@gmail.com. globalmoneyinvestor@gmail.com. Happy investing and have a great day ahead. Take care. Bye-bye.